Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about JPMorgan stock, ticker symbol JPM. Make sure you stick to the end of the video for my opinion on this stock. So JPMorgan Chase reported earnings before market open today, and they're currently priced at $99 per share past year, down 14.16%. And as you can see, it dipped significantly since end of February, and it's been fluctuating ever since. Past 5 years, up 46%. Market cap is $299 billion. It's one of the largest banks in the world. P/E ratio is 10.87. Financial industry is typically lower P/E ratio, and dividend yield is 3.64%, so relatively high dividend yield. Taking a look at the earnings, you can see actual earnings per share is $1.38, which beat expected EPS of $1.04. So it's great news to see that EPS number better than expected. And as I mentioned, JPMorgan Chase is a financial holding company and provides financial and investment banking services. So one of the largest banks in the world and very well recognized. So taking a look at the actual earnings results, you can see that July 14th, that's today. So their Q2 2020 net income of $4.7 billion and EPS of $1.38. As I mentioned, managed revenue of $33.8 billion. So very high revenue for this business. Expense of $16.9 billion and managed overhead ratio of 50%. Balance sheet, you can see loans, average loans of $998 billion, up 4% year over year and 4% quarter over quarter. So it's good to see that kind of growth. Deposits, average deposits of 1.9 trillion, up 25% year over year and 16% quarter over quarter. Good to see that kind of growth as well. Base 3 CET1 capital of 191 billion, standardized CET1 capital ratio of 12.4%, advanced ratio of 13.1%. Now in terms of capital return to shareholders, this is the number we want to see increase. So common dividend of 2.8 billion or 90 cents per share. So great to see that they're returning their earnings back to shareholders. So it's very rewarding to hold their shares. Announced suspension of repurchases at least through the end of Q3 20. So they're not buying back any of their shares. Typically, companies buy back shares when they're confident in their business, but I think recently, in terms of regulation, a lot of the banks withheld their their repurchase, the buybacks. So it's not like JP Morgan's the only one that faced this. So you can also see that significant items, these are in millions. So firm-wide reserve build, you can see pre-tax down 8.9 billion, net income 6.7 billion, EPS of $2.19. Now in terms of year-to-date activity, this is the issuance volume in billion dollars. So you can see over time it's been steadily increasing, which is good to see. From January, February, March, April, May, June. Now in terms of debit and credit card sales volume, percent change year over year, you can see a slight dip with March and then steadily increase month to month from April to June. Now equity issuance volume, you can see January to April, January to March, it took a little dip. April, May, June, you can see an increase. So follow-ons, convertibles, and IPOs, you can see June, it's picking back up in volume. Now mortgage and auto applications change year over year. You can see March to April, it took a little dip, and then June spiked back up. Now consumer lending relief program, what we are seeing You can see since March 13th, provided assistance to nearly 1.7 million accounts, representing $79 billion of balances. And a large share of customers continue to pay us through the relief period. So the lending program, you can see that that's a huge number of 1.7 million accounts. Now, trailing 7-day average of daily payments referrals granted, you can see the numbers from March all the way till June. You can see a 95% decline since peak. Now for the consumer card, business card, home lending, and auto, percentage of accounts with payment deferred, you can see that auto being the highest and a consumer card being the lowest. Of the accounts with deferred payment deferred, you can see less than 30 days past due at time of deferral request, 93%, 94, 95, 89 respectively. And then percent with greater than or equal to one payment during deferral period, it's around the 50% range. Now for Q2 financial results, this is what we're interested in. These are in $1 billion except per share data. Net interest income, you can see, $14 billion for Q2 20. And the non-interest revenue, you can see 19.9 billion. Managed revenue, expense, and credit costs, you can see it's 33.8 billion, 16.9 billion, and 10.5 billion. Reported net income, you can see it's 4.7 billion with an effective tax rate of 15.8% and a managed rate of 26.8%. Now returned earnings per share is $1.38, as I mentioned. And return on, I think ROE is return on equity, 7%. Overhead ratio managed is 50%. Now, in terms of the reserve build, allowance for credit issues in $1 billion, consumer is 5.7 billion in 2019. You can see Q2 reserve build 2.9 billion, and then as of 6/3/20 is 17.8 billion. Now let's take a look at the firm-wide number. That's the total. You can see it's 14.3 billion to 6.8 billion. March was 25.4 billion, and then as of June 30th, 2020, 34.3 billion. So good to see that number increase. Now in terms of U.S. unemployment rate, base case outlook, you can see Q2 20, Q4, 10.9, 9%, 7.7. So it seems like it's steadily increasing in terms of their outlook. Now, U.S. real GDP cumulative change, you can see base outlook at for Q2 20, you can see down 6.2, down 4%, and down 3%. Now, they have a fortress balance sheet, very solid balance sheet and capital. So you can see Q2 20, the most recent quarter, capital $191 billion in capital, capital ratio 12.4%. Take a look at the total assets. You can see it's 3.2 billion. Tangible book value per share $61.76. So overall, very solid financials. So this is a pre-provision net revenue. Generates new capital capacity. A lot of these are very technical, so I'm not going to get into the details, into the weeds. So take a look at the consumer and community banking. Revenue is 12.2 million. Net income is down 176. Sorry, this is 12.2 billion for revenue, and net income loss was 176 million. Now, key drivers and stats, you can see equity is 52 billion. Return on equity down 2%. Overhead ratio of 54%. Average loans of 436 billion. Average deposits 832 billion. Let's see. Active mobile customers is 39 million, and then debit and credit sales volume 237.6 billion. So average loans down 7% year over year. Average deposits up 20% year over year. Active mobile customers, good to see their mobile growth 10% year over year. Client investment assets up 9% year over year. Credit card sales volume down 23% year over year. So overall, their key driver stats, you can see an increase in deposits, investments, assets, mobile, but a decrease in credit card sales. Now taking a look at the financial performance, net loss of 176 million, revenue of 12.2 billion, down 9% year over year, expense of 6.6 billion, down 3% year over year, lower travel related benefits, structural expense, and marketing investments, credit costs of 5.8 billion, of 4.7 billion year over year. So you can see overall pretty positive, I think. Solid financial, solid performance in the consumer space. Corporate and investment bank, you can see also fairly solid revenue as well as net income. Great to see that positive number. Key driver statistics, return on equity 27%, equity $80 billion, overhead ratio 41, comp revenue 24. So great to see that as well. Scrolling down a bit. All right, now let's take a look at outlook. Expected FY20 net interest income to be 56 billion, market dependent, and adjusted expense of $65 billion. So that's our outlook. Let's see, take a look at the corporate. Corporate doesn't seem to be doing too well. It's going to be a loss for that business segment. Asset wealth management, you can see it's this one's pretty positive. Great to see this margin. Overall, I think their business is doing pretty well. Decent growth, solid financial, solid reserve in their cash. So I think it's a great long-term position to hold. They also have a dividend yield, so great to have this in the long term. I don't have individual stocks equity in this in JPMorgan Chase, but I do have exposure to it through my ETFs, Vanguard S&P 500 ETF, and I plan to continue holding that position. That's all for this video. What are your thoughts on JPMorgan Chase? Comment down below. Remember to use my referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.